Hey guys, today I'm going to teach you a stupid simple scalping strategy. I use this strategy every single day at the market open, and the reason I want to show you is because it actually works. I get an 80% win rate using this exact strategy, and the results I've been able to achieve are mind-blowing. Let's dive in, shall we? So the stock I'm looking at today is Tesla. As you can see, I drew a line of support. During the pre-market, Tesla is down on the day about 4%. That's one of the main things I look for in these large cap stocks, and the volume is pretty high. I don't trade with the pre-market on to be able to see the intraday patterns clearer. The plan was to let Tesla touch the support line and take a quick scalp over 425. I'm in just above 425 with 500 shares. At this point, the volume is just right, and the buyers on the time and sales look promising. Here I place my emergency exit, but in a few moments you would see I didn't need it. And here's the momentum I've been waiting on. I'm up over 2 points already. And I'm out with a profit of over $1,300. So the stock in question today is Adobe. ADBE. I'm planning a short on Adobe. Adobe was down about 6% in the pre-market, which caught my attention. I usually choose stocks to trade that either gap up or down at least 5%. However, if the stock has a higher price point, I may compromise on that. As you can see, my order was placed at around $485.50. I derived this entry from some pre-market research that I did before the open. But as you can see, I moved my entry up under $485, the whole number. I did this because of the 5-minute chart. These are two important things to note. First, you must always remember to check the 5-minute chart intraday. It tells you a lot about the stock's price movement that you just can't see on the 1 minute. Second, also, if you notice, I put the order just a couple cents below the whole dollar price of $485. This is because sometimes a stock with this much momentum may go down to the whole number and bounce off it a few times before breaking. You want to get in when there is confirmation of the actual break. Some of you may also have noticed that I take off the pre-market section of my trading chart because it helps me to see the patterns better. This pattern is called a reversal. This one is very clear and textbook, and I'm glad I captured it to show you guys. There's the break. Usually with these types of stocks, there's a lot of orders waiting at whole dollars, so the price usually fluctuates. My risk on this stock is at the top of this candle, which is about $488.30. Now this is exciting. We're getting some lovely continuation to the downside, but it hasn't quite reached my target, so we wait. And as we can see, the 1-minute chart is beautiful, crystal clear setup. We're up almost 2 points right now. This trade is going well. Now, here is where I make a mistake.
I'm sorry! No!
Adobe just reached my target, but I hesitated to take a partial. This is because I got caught up with all the momentum. This is a beginner mistake. When you're trading, you either leave money on the table or give back profits. In this case, I gave back profits because of my slow exit. But I took my partials until I was completely out of the trade, and as we can see, it netted me around $750 on the day. This is exactly how I made $2,000 shorting Roblox. I found Roblox during the pre-market. It had gapped down dramatically. I usually trade stocks that gap down at least 5%. All right, let's break this down step by step. I waited for Roblox to pull back up first, because reversals aren't real until the market confirms them. You can see it right here on the 5-minute chart. The price bounced up like it wanted to rally. But then, bam, it reversed hard. That's when I jumped in. Why? 2 reasons. Firstly, the volume was rising as it dropped. That's the market shouting, sellers are in control. Secondly, the time and sales showed a flood of red orders. Big players dumping shares. Now here's what most traders miss. Keep it stupid simple. I didn't care about fancy indicators. I just look for clean setups like this one. Price action and volume. But wait. This stock tried to fake me out right here. It looked like a reversal. But the volume was weak and the price action was sloppy. No conviction. That's how you know it's a bull trap. I stayed patient, ignored the noise, and stuck to my plan. And guess what? The selling pressure kept accelerating. Red orders piled up, the bids evaporated, and I rode it all the way down. You should always remember these 3 things. 1. Simple strategies win. No overthinking. 2. Wait for the market to scream its intent. Volume plus price. 3. Ignore fakeouts. They're just background noise. If you're overcomplicating your trades, you're doing it wrong. Watch what happens. Here's the #1 mistake I see traders make. They panic and exit during consolidation. Let me show you why that's killing your profits. See this little squeeze right here? Price is just chilling. No big moves. Most traders think, uh-oh, it's reversing. I'm out. And cover their short. But look what happens next. Boom. It dumps again. If you're jumping out of trades every time the price pauses, ask yourself, am I trading the chart or my emotions? Remember these 3 things. Ignore consolidation noise, unless the reason for the trend changes. Wait for confirmation. Volume plus price breaking structure. Let your winners run. Your risk-reward will thank you. Stick to this, and you'll stop leaving money on the table. Here we see I'm up nearly $3,000 on the day. So to demonstrate him using this live trade, I took on Traw's Farmer. The first thing that caught my attention is the volume. Yes, this is part of the pattern, and it's the first part. If the volume on a stock isn't right, then the trade is 65% fucked. And by right, I mean the volume should be at least 5 million or more. The second thing to look for is the 5-minute pattern. This candle is beautiful. The candle tried going down, but it formed a doji. This indicates that the sellers are unsure and that the stock likely doesn't want to go down. I could have gotten faked out here, but because of this doji candle, I hold my position. I even gained the confidence to add 1,000 shares a little below my entry. I'm going in a little heavy on this trade, but that's only because the momentum is looking great and the setup is clean. But the last step is what tied the whole thing together, and without it, the trade will most likely fail. So now I wait for the stock to hit my target. My finger is on the sell button because When this thing moves, it moves fast, so I want to be ready. This is something you also need to remember. You don't want to be distracted while trading these quick-moving stocks. The reason most traders don't come out with huge profits is because they aren't quick enough. Now look what happened here. While trading, anything can happen, and you need to be ready for it. Not everything is going to come straight forward. The stock just halted. It looks to be a 5-minute halt. This is when the price moves so fast, either to the upside or downside, and the price freezes for sometimes as little as 5 minutes, or the longest I've seen, which is a few days. Those are a lot less common though. The key is not to panic, but to remain calm and watch the price movement when the stock resumes. So the third and final thing to look for when using this strategy is a good pullback. This is something I've seen for the past 9 years of my trading journey. When the stock pulls back, like how it did right here, it usually leads to an explosive continuation to the opposite side. Yes, this goes for shorts as well. And here we see, I wrap up one of my biggest days yet, over $7,000. I'm kicking things off with part 1 of my Tesla trades, where I made over $2,000. If you're looking to see how I spot these setups, manage risk, and pull in consistent profits, you're in the right place. Let's break down this first trade and get you closer to making these moves yourself. Let's dive in. So as we can see, the trade hit my entry order quickly. Tesla usually moves very quickly, so you have to be ready to go. I'm up $1,400 so far, but I hesitate to take the profit and it nearly ruins the entire trade. Look at what I did next. I didn't take the profit and now it's going against me, but I did something that saved the trade. Keep watching. Did you see that? I added to the trade. This was perfect because the price came right back up to my entry. I won't recommend doing this unless you do proper technical analysis beforehand. As you can see, I'm going long on Tesla. Tesla is up on the day and has already pulled back a good amount. The volume is looking good as well, 19 million shares. So I place my order just above the whole dollar, waiting for continuation. This 5-minute setup is also looking very good for a reversal. These are the stupid simple patterns I look for on the daily. Now it's just to wait until it hits my target, which is a few points higher. I love these kinds of trades on Tesla because it moves quick. This is also important to note. When I'm exiting my trades, I exit while there's still momentum to the upside. I don't wait for the trades to start to cool down to start selling because I want to always respect my target and even get a better exit. And that's how I had a $2,000 green day. There's a link down below to a free resource for traders looking to improve their skills and get on the path to making their first $10,000 in just 30 days. It's 100% free and 100% valuable. Check it out, and I'll see you in the next video.